Good morning, guys. Hopefully you're all well. Just kind of setting up my charts here for today's show. Joined by Max, as always. Max never has anything to say at the beginning of these shows, but we're going to put him on the spot. Max, what do you got to say? I heard you had a great morning in the live trading session.
It's been a great day of trading, and yeah, we just took a trade on the live trading session. It was an iffy one, but it played out, so we take what we can get.
That's not
Yeah,
what you told me before the stream. You told me
absolutely.
two bangers. Two
I
bangers
did have
today.
two bangers,
Yeah.
and a mediocre one, which was on
Are you
stream.
going to cover those today for the people?
Of course, because I covered them in the group, so I'll do it for the people as well.
Bueno. All right, guys. Well, I'm going to go ahead and share my screen. We're going to talk about the most important levels on Bitcoin. If you weren't here yesterday, you know that we hit some pretty important targets. We did go ahead and smack dab into the target I've been asking for and pleading for since basically the end of December. And that is that yearly pivot at 26,724. Some people will call this a front run. I'm going to go ahead and collect the cloud anyway. Who cares about $80? But you can see that we are finding resistance where we said we don't want to be finding resistance. So for those of you that weren't here yesterday, which I imagine there's a few of you, or if you were just watching this back, this box is comprised of the June low at 25,222 and then 25,351 being your prior range high. Okay, so what you didn't want to see is acceptance into this range. And if we found acceptance, we really want to be living above 24,700. Main reason being is this is 24,700. Hopefully you guys can see that line. If not, I'm going to go ahead and make it a little bit larger. You see this candle wick high, and we'll go ahead and adjust this so that you guys can get a better view. And we'll make it a little thicker. There you go. That's your weekly swing fail. I've been talking about 24/7 for, well, really since over here, and then just now it's relevant again over here. We've not closed a weekly candle above this since, well, closed one is all the way back here at the beginning of June. So we need to see a change of behavior if we're going to see this range actually, evolve into something more. So that's going to be your first sign. Is that move above 24/7? If you were looking at something a little more locally as well on the higher time frames, you could move out to the monthly chart as well. That's where you're going to find our next level. This is a monthly level, so also important. And you can see that the reason I brought it up, it's 24K was a really important point of control for us for a while when we were trading up here in this little range before this moved down. You've got this level as well, right? So 23,967.50 and 24,700. Those are the two levels I was giving during this move up for support, which we did back test this one very nicely before making that final push. But you want to see the high time frames start to confirm this. Normally, I would never say that we need to see a time frame closure. You guys know me when they say, well, what kind of a closure above the level would you consider claimed? We're normally looking for delta, open interest, strength coming into the move. In this case, we are taking a little more basic approach, and we're just looking for that change of behavior. So if we can't live above these levels, we really do need to see these levels being protected and held. And this one doesn't close till the end of the month. Obviously, that's in 2 weeks, well, 15, 16 days. And this one coming up at the end of the week. So if we start losing these levels, I would expect to see this monthly open. And that's going to be a key area on the chart. Main reason being, if we can't get out of the range, which you can see is now resistance. So if you missed the short from up here, if you follow me on Twitter, you know that I did get in a short. So I'm sat happy in that one. I've taken my profit on it right around 24, and I'll continue to hold that short until this proves otherwise. Because if we're going to be living below this region of the chart, it doesn't really bode well for me. So watching 24/7, 23,967, then we move out to our range data. We do have some volume data you need to go over. In this case, we're only looking at local range, in my opinion, and I'm looking for the monthly range. And yesterday, this is now moving up, which is a good sign, to be honest with you. Your range value area high was coming in at the monthly open. I don't think that we can still dismiss the monthly open, and I would really put this as a region. I would say this September high has been very important, and it will remain so. Same with this monthly open, because if we start living below the monthly open again, well, it looks like you want to come back to 22.4, which puts you below this all-important support right here. And then we play the game of, is this whole inefficiency going to get filled in? Because that's what this is. This is straight up and down price action. So it really is in Bitcoin's best interest that if it is going to dip below 24K, it really does need to be holding on to, I would say, this region of the chart, maybe a wick basis to 22.4, but I'm not really looking for that right now. I would want to see this region being support, giving us this area. So when we extend this box over now, and you can see why it's so important. Above this box is good. Below this box, not so much, right? So if Bitcoin is finding acceptance into this range, losing these areas of support, and you're holding a short from up here, that's really your cue to continue holding it, because nothing good is happening in terms of for bulls. Which this wouldn't be the end of the world, if this remained range bound from here. I know that everyone's looking for 30K, and I think that as of right now, we have no reason not to think that we won't go there because we haven't fulfilled any of these bearish, scenarios yet. But in terms of, end of the month, things like that coming in, we oftentimes will have new pivots, new monthly averages, new quarterly averages are going to be printing as well. And that also means our quarterly range is going to be closing out. And the reason we track these is because they do tend to fill at specific rates. And we have the quarter one, right? And so what do you notice about the quarter one? And what do you notice about the monthly? We'll go into a lower time frame here in just a second. That monthly range does not want to load, does it? I think it's because I haven't updated it in so long. I need to do this. We'll see. Maybe not. What you'll notice is the point of control overlay is very, very close to where the value area low is, letting us know that, well, if you break down from probably this September high in your quarterly POC, the odds of you cycling this range are higher, in my opinion. I don't think we're just going to the monthly point of control at that point. I think we're more than likely going to be coming down and fulfilling these ranges and going lower into like the previous month low, et cetera, et cetera. So that's what you need to be aware of there. And then we'll take a look at our averages, even though the averages aren't quite as relevant for the monthly just yet. I know there's a lot of lines on the chart right here. Well, there's not that many, but more than I care to have on there when I'm talking. If we look at the incoming averages for the coming sessions, the monthly is not going to be as important, even though we're going to close a bi-weekly candle later this week. So we will have a new caveman, but we do want to look at the quarterly. Oh, that's the wrong indicator. Quarterly's up. All right, let's see. Quarterly comes in. There's your monthly at 23, telling us we'd be remain range bound. There is your quarterly. So for me, I'm expecting to see this region of the chart potentially backfill those POCs still until proven otherwise off of this bounce. So I would expect to see these levels back into this 22.5 region. Main reason being is, well, statistically speaking, that's where our quarterly pivot's coming in. All of our pivots are generating lower into this region. So a mean reversion is all this would be. It's just going back to the last average. So that's how I'm looking at it. I'm going to continue holding that short until Bitcoin closes above this blue box. My short's from above 26,000. So even if Bitcoin comes up and closes above this box, I'll gladly close that short. I won't lose any money. And you guys know that I'm still hedged long from 16.6. I did take some of those profits yesterday at 26,069. 2% of that position was closed. Another 1% of the position will be closed at 26,666. Those are all predetermined take profits. So that is how I do that. And then after that, if we see the criteria we need for continuation, so we need to see 24.7K holding as support and 24K. If we were to range between here and put pressure on this upside resistance, it's not a bearish thing. You could still look at this as bullish market structure, right? However, the moment we start coming in and losing this region of the chart, monthly open, September high, this like 22, you pretty much got 22.4 up to 23.1, this little like zone. It's been a very important area on the chart, as you can see. You start breaking down from that, and I would expect to probably challenge this low, to be quite frank with you guys. I would be expecting it. Does that mean I'm going to get what I want? Not necessarily, but that's what I would start looking for. It would start to look a little more bearish to me. And this was a very quick move up. And I would think that if we start breaking down below these levels, we'd probably have a quick move down as well. I don't know if Max agrees with that or not, but traditionally that's how I see the market. So if we do make the pivot though up here and price is able to put the pressure on this resistance, stay above these supports, because that's what I'm going to be doing is trading these supports intraday with the guys in the group. I'm looking to potentially either swing fail this high, right? If we can get back above 25,351, stay there. Would like to swing fail the high, or make that secondary push to 28,726 and then up into this box at 29,873 to 30,169. Those would be the next levels that I'm interested in trading. And then it becomes a game of, do we confirm old resistance into support, right? We can play that game when we get there. And if we do, good things can happen, right? If we can't, then we figure out where the next local support is and we trade it. I mean, that's really all we're doing here. We're not doing anything special. I do want to look at one thing. I was looking at Tesla today because I thought it was interesting. Everyone's looking for the gap fill. You got front ran by the EQ. Where was I going with this? Bitcoin, Bybit. And I can get rid of this March value area high now because it's no longer relevant. That was just for the group yesterday. Yeah, fairly clean chart. Let's take a peek at one thing I am curious about because I will eventually delete this. So you guys know we've been talking time and price, right? So this is a time and price line. It's a sine line, S-I-N-E. And essentially, you're using it to project the oscillations of a range. And oftentimes, it'll be seen as support and resistance. You guys know that you'll show me in these lives showing you that. So resistance, 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 resistance right here breaks above it, closes on it. And what are we trying to do right now? We just talked about how we don't want to lose 24/7. You're really sitting on that level, holding your sine line as support. We've seen this before. We've done this before. You can go back lots of times and see that you're really wanting to hold on to the support here. So this is your all-time high at 69K, right? You came up above our target, which was just the all-time high from prior, right? And we're just trying to time it out, which it didn't time it perfectly because the high came into the right. However, very similar function, came back down, support, support, before finally breaking through the level. And for me, that level on this one was $62,000 for anyone that remembers. And I'll go ahead and change this to 62. Oh, that's perfect. It is 62. Nailed it. See how you came back down to 62? Boom, boom. It's support. The moment we break 62, we break our time and price line. There's your sell-off, okay? Same with right here when we're grinding up, sell-off, okay? We finally broke down. We're no longer expecting the range to continue to oscillate higher. We're looking at this very, very similarly. So if we're going to see continuation, what do we need to see? Continuation is the name of the game. 24.7K to me is the most important immediate support, then 24,000, then 23,134. However, if we start breaking back into this range, is it the end of the world? Maybe not necessarily the best way to word it. However, it doesn't look as good to me. And then I start to expect this to maybe play out over time. And we'll see what the Fed's doing and what the macro is doing at that time. But for me, the best trade was a short up here, so I took it, and I'm going to hang on to that one for a little bit until price makes me close it. I guess that's the best way to word that. So I have not been doing a good job of looking at the chat, so I'm going to go ahead and pop over to there, and I'm going to let Max take over, as I know that he's got to be itching to get back on and talk about his trades this morning.
Okay, so today's been it's been pretty good. The volatility's been there in the from the afternoon from my point of view. So the trades that were really pretty much sitters, they're rather easy to catch on to initially, and then we'll go over what we saw in the live trading session, why we took the trade we did. But yeah, initially it was simply a golden pocket pulled from the low to what was the high up here. So gold pocket pulled from there to there. There's also the initial balance, and the gold pocket, quite simply, I was surprised it didn't take the low, but you had many reasons when you were there to take that long initially. If you go down to it and zoom in, you can see some positions changing hands here. You got a nice little delta switch up, started to stall a little bit, and ultimately, buyers came through. It was really on the volume chart, which really gave it away in order to take it, as you were getting, I believe this is it. No, this is not it. Where were we? Here. As you engulfed a lot of what the volume that was coming in. So it was taking $3 million to effectively move the price. I think it was like $30 or something. Then it took 1 million in the buy side to do the same move, but obviously up. And that was on increasing open interest, pretty high percentage, 66 is okay, pretty much all positive open interest. So it's buyers coming in, probably some shorts as well from this zero here that would have been trapped. So trapped shorts, buyers coming in, and it also made a little higher low for anyone that was unsure. It was only minor, but given the fact you're in the gold pocket, could have just taken the low, but your stop loss would have covered it. because you're not going to put the stop loss at the low that is potentially being swung failed, but you had your reasons to take the long there initially. That's pretty neat, I found. And then the other trade, which was an absolute, this was my favorite one. So it was the golden pocket from the high to the low that was made. I'm going to delete this one now because I've just done something. I don't know what I've done. I'm actually going to delete this now because I'm not asked about it. So yeah, right. The other one was the gold pocket from the high to the low, and the 0.5 lined up really nicely with the previous month high. So really key level, because obviously it's been swung fail now effectively, and given that it's been swung fail, it's now, if you can get back above that level, you can start to put pressure on the high again. But as you come back and reject from it, it's pretty bearish, to be honest with you. The fact you have rejected from it in the way we have, to come up and try to make another lower high, and rejected from it again, pretty much. But yeah, it's not the best looking chart that we've got right here if you are bullish. But the daily open has really been key today. So if we go through the order flow, you can see that, and not on this one, on this one. If you see where the daily open is, and put the marked on, hopefully it doesn't mess up my chart too much. There it is. So the daily open, this bit here is the only one that we really want to look at for now. As you can see above here, we had a ton of buying take place. Actually give us an SFP, which came down, and we lingered below the daily open for quite some time, effectively locking in those buyers that were trapped, not giving them any chance to get out of their trade. Come down, then you start to get some shorts pile in at these lows. You come back up, you squeeze them out on the. I think we had some bullish news around here, but I'm not 100% sure what it was. I think it was PPI or something. But yeah, that came up, gave us the nice volatility, gave us the nice short trade. I was stopped out of it when it came up here. But again, what you can see up here is we had another interesting thing occur. It again puts a lot of weight on the daily open, because as we had earlier on in the day, we had a similar thing occur. We had a load of buyers coming in up here. You can see here, this candle here was 6.5 million positive delta on 3.6 open interest, 3.6 million. So there's a lot of buyers in this region on the chart, which was ultimately what the short that we took on stream was entailing. The fact that you're making a lower high and then trapping the longs that had entered. Hindsight, we probably should have entered up here, but we did not. We only got in down here. But is what it is. Profit's profit at the end of the day. But yeah, daily open really is key. If you're above it, you've got shorts trapped. If you're below it, you've got longs trapped. And right now we are clearly making a move down to take out those longs. And where do we take out those longs? Well, we've got two options. And the only longs that I'll really be looking at right now are a swing fail of these two lows, because we didn't take any of the liquidity earlier in the day. So a swing fail of this low, coming down here, getting back above it would be the setup. That would be the swing failure pan, and you'd want to see either positions changing hands or shorts pile in and get trapped. And ultimately, you take the trade on the move in the opposing direction to the trend on strength. So you'd want to see volume, you'd want to see buying balances in this instance, and ideally increasing open interest of the buyers and that are not getting trapped. So you're on a short start to enter and start to get trapped, or you'd want to see positions changing hands, really negative delta on almost flat open interest that is then bought back up on a lot of buying, whether it is shorts closing out or actual buyers coming in. You just want to see a lot of volume and a lot of buyers as you break back above the level. Other than that, I'm not really that bullish. We have got a single print to mention. It's not anything new. We did cover it yesterday. But yeah, we've got a single print from down here. So it's below the current week value area low. And it is in a really key spot, because if you do start to break below that, you kind of head into the targets, which Magic mentioned below, because single prints are inefficiencies. And if we do start to make our way back into them, chances are you are going to start filling them. However, I do think it has the potential to offer as a really sweet trade. So one of my favorite things to actually trade off is this 310 EMA based on a 50-minute time frame. Magic will correct me. I think it's a 4 hour on like
Yeah, it's like a 4 hour, but we just call it Bay EMA.
Yeah,
Yeah,
but is it the 4 hour 21 or is it 4 hour
it's pretty
7?
close. I think it's the 4 hour 21. It's pretty close
Yeah.
to it.
So what we've done is we've calculated the 4 hour one and taken it so it matches pretty much exactly with on the 15-minute time frame. Because if you put the 4 hour one on the 15-minute time frame, there's normally a gap. Well, wasn't very favorable. So I found which one is pretty much exactly the same, and it really is a beast of a EMA. So it really does work well. So with the trade that I'm kind of expecting is something like this to occur. It's red, but I'll change it to green. Is you come down, you sweep the lows, so you dip into that that single print just a touch, but you're not really breaking into it, but just a little touch, and you're tapping that EMA, and that'd be the only other trade that I'm really looking at. So either a swing failure pattern from here. I'm kind of ignoring this low, which it very easily could be this low is the one that swung failed, but I really do like the fact that the EMA is there because it does have a lot of the touches on it are normally very good. You can normally scalp many trades on this throughout the day. 1, 2. If you break through, you normally have to have a lot of strength, which could come in at the single print, but it would need a lot of strength to break it. So that's the only other setup that I'm really looking at. But as long as we are below the daily open, they're the trades that are on the table. Get back above there. I think you can swing fail this one, go into the gold pocket, but there's not really any confluences on the golden pocket, so I'm not 100% convinced with it. But the point of control is a touch above it, so there is plenty of resistance above. But while we've got those trap traders locked in, it's not the best lock. So
You were asleep yesterday when we got the move down into this like 24K area. I was awake and trading it, and the London low was taken at 24,224, and then the Asia low at 24,033 from the prior sessions yesterday.
yeah.
Does that concern you at all if we revisit those areas since we've already kind of taken some of that? Like if we just come down and take those as well, or is that something that you're not too? I didn't know if there's something you could see in the order flow that would make you think that the swing fail might not be good.
Let's have a look at it. So you're thinking of the previous day low, effectively, yeah?
Is that what that would be? Yeah, it would be the previous day low now, isn't it? I haven't marked my levels this morning. I had a bit of a morning where I woke up at like just before 5 a.m. like normal, and then I fell back asleep till about 20 minutes before we went live, guys. So I don't know what happened.
I mean, when you're looking at like, is a level going to be swung fail? You really have to look at what traders have come into the market after that low has been made, because you can't look at a low. Sometimes you can, but we've not been up here for long enough to really look at this range that is this. What we've been up here for like two days. You can't really look at this low and say, this one's going to be swung. This one's you have to look at the data after, because the low actually is pretty basic. They're not the highest volume. It's only 38 million. We've had way more volume on some of the lows than highs that have been made today. But after that, you have had a lot of buyers coming in. The question is have they been trailing their stop losses? Because if they've been trailing their stop losses, let's say they bought in this region where you can see some increasing in open interest and some positive delta. If they've been trailing their stop loss, chances are they're going to be putting their stop loss at this initial low at 24370-ish. So that's why I favored that one to be swung failed initially. And just purely on the basis that this low that we've got here is just the bottom of the range. If we are literally talking bottoms and tops of the range, the bottom in the single print is just another. I mean, let's work it out. Let me find this is what I want. So from here to there, it's another $150 effectively. Are we going to really cut hairs over $150?
See hairs?
Yeah,
no.
I don't know. I don't know. I would prefer it come and test that single print for me personally, just to let us know whether there's any strength there or not. That would be the only long I'm really looking at.
Fair.
But
so basically what you're saying is along the bottom of the range.
Basic stuff.
Yeah.
But yeah, swing failed up here. I like the thought of it because of just how many buyers have been coming in up in these regions. Like literally, if you look at the footprint,
failing to push the price.
If you look at it here, so where was it earlier here? Loads of buyers coming in, positive delta, all on increasing open interest. They've had the chance to be squeezed out and they've had the chance to take profits, but not many do. But then even at the highs here, you had more buyers coming in. So, if you were to buy here, let's just say, where are you putting your stop loss? Chances are it's going to be at this one because you're not going to put it at the last low because that's a bit risky. You're going to put it at the second to last one because that's safe, I guess, if you're buying at the fucking high. I don't know what's safe to you at that point, but anyway, I prefer the swing failure pattern of this one or the SP, the single print swing failure pattern effectively. I don't know what else we can call it. But yeah, this low, I just know the volume's not huge on it. I'm actually surprised it's only 38 million. I hadn't really looked at it. I just kind of came to the charts about midday and saw the ones that we've got. But yeah, that's not a huge volume there. If you look at the other ones, the volume's coming here. Look at that, you've got 67 million there. But really, the delta and open interest isn't telling you anything on any of these candles. It's just they're matching on all of them. So I don't know. I'm unsure about the previous day low. I think I'd prefer an intraday long from here. And then if we do lose that one, I'd just rather we go to the single print and test that, to be honest with you. But yeah. Voila.
Fair enough. Yeah, no, good stuff. Trying to fish a day trade. But all the action happens in the Asia and London sessions. That is
you
not
fucking joking.
Yeah, a lot of times that's not the case, but sometimes it does work out that way for like a string of days. It'll be like Asia's getting all the action or London, but most of the time, I will tell you that New York is where it's at. If I could pick one session to trade every day, which is what I do anyway, it's New York, hands down. So.
Yeah, I don't think Danny's in the group here, but I know he would strongly disagree with that too. It's me and Danny pretty much sat in the members area going, God, London session, it's wang.
Yeah.
All day.
I used to do my live trading sessions during the Asian session, and it was awful. We managed to find trades for like 8-9 weeks in a row, but it was one of those things where I had to sit on stream 3 or 4 hours just to find, and wait. It was painful. And then we're TPing after like $100, and I'm going to bed at like midnight. So I did kind of cut that out because there's just no way. Maybe we'll bring back a New York session one so that I can actually trade with you guys live during the day as well. I usually leave that up to Max, but the problem is everybody's at work during the New York session. So we get like 5 people in there and we're sat there for a few hours and no one's going to watch back a live stream that's like 4 hours long. But we need to figure something out there. In terms of day trades now, I think Max just covered it. If you scroll back, if we're looking for a long, we'd prefer to see the low. I think he's going to cover something here in the current bounce, but go ahead.
So I think that Goat Ninja asked for it. So right now, we've taken this low, so that's okay. Some positions changing hands, not enough for me to really be like hot on it though. And you are getting some buyers. It just remains the same. Daily open really is key today. It really is. So you need to keep your eyes on it. If we're failing to get above it and start to trap these buyers that it's minimal because the open interest isn't huge. But if we do start to come back down here, so a little example of something similar that occurred. This selling that occurred here, you then had a huge spike with buying that came in, and then you slowly dawdled your way down and started to trap them all. It's very bearish. As soon as you start to get traders and then trap them, it's bearish. So, or if it's longs in particular, but as soon as you start to get above shorts and start to trap them, it's bullish. Right now, we've got a lot of longs trapped. This volume here does not convince me that they've been wiped out. However, if we can start to get back above the daily open, start to trap some of these shorts that we've got here, they're coming around the day point of control above the VWAP, around 24,850. You can start to get back above there. You can start to breathe a bit easier if you're in a long effectively, because then you're ultimately going to be trying to squeeze out that side of the market, squeeze out the shorts. So what the price does is, I always say this, Bitcoin is a liquidity whore. What she will do is go to trap the most traders and squeeze them out, force them out of the position. So once she's forced one side out of the position, what does she have to do? She then has to come back and force the other side out of the position. So that's why we look for the lows and highs for swing failure patterns because that's where the liquidity is at. So have we taken the important low? We've taken this one, but this is the better. This would be the better swing failure pattern. This is where the most liquidity is going to come out, because why? You've had two lows here, and they've not been taken. They pretty much bounced from the same region. So you've got two lows here where we really haven't gone into any of the liquidity below there, and then more has been added on. And the safe trader, it pains me to say that, because these guys buying up here are not safe traders. But where are they going to be putting their stop loss if they've have any sense? Maybe at this low, which kind of has just been taken. But if you're going to do two lows away, which is even safer, it's down here adding to the liquidity again. And the fact that we are getting buyers here, where are they going to be putting their stop loss? At this low again. This is where the liquidity is going to be at. So linger below the daily open, similar to what we had early this morning, where we lingered below it, couldn't break back above it, and ultimately came down to come and tap the low. If we do the similar thing here, this time we're going to take the low. I don't think there's any reason for us not to at this point. But before we had the golden pocket, but now we don't really have that. So, this low, until we can get above the day point of control and 24850, you've got to play it very safe with longs, really do, because there's just so many trapped right now. So
indeed,
that's what I would say to you, Crypto Ninja.
We had one guy ask a question that's non-trading related. I'm going to go ahead and we'll talk about it. Is Bitcoin decoupling finally? Mr. Shinobi asking the hard questions that I don't have an answer to. So I'll be point blank with you. I don't know, man. We see periods where assets are going to be not unrelated, but they aren't going to be one-to-one like they used to be, where like you could watch Bitcoin in the S&P 500 or the ES, and whatever the ES was doing or the SPX was doing, Bitcoin was going to do, right? There's going to be times where they don't. That's why they're given a ratio a lot of times. I want to say that one is over 80%. So you got to think 20% of the time, Bitcoin's not going to be directly correlated with those assets. Will a decoupling happen eventually? Yes. Does a bank run need to happen for that to happen? Maybe. If we see more bank runs, you very well could see a Bitcoin decoupling. And, that gets into the macro. And the reason you guys have noticed that I've kind of shifted away from the macro a little bit is not because Bitcoin is decoupling. And I think that it's because it started to play out to where it was just better just to trade only the Bitcoin chart and cut out all the noise. You could do that all the time if you want, but a lot of people want to hear about the DXY and want to hear about the SPX or hear about rates. And to me, that's all stuff that's out of our control. And the only thing I can control is how I'm looking at the Bitcoin chart and what plans I'm making for trades. So that's kind of what I've defaulted back to. That's always going to be the default. Like, all right, this is what we do. Basic stuff. We're going to charting and we're going to make plans. And if those plans don't fulfill, we're not going to put any risk in the market. However, if our plan does begin to play out and it's good for us, we control our risk and we get into the market, right? And we try to execute. That's really what it comes down to. So if Bitcoin decoupled, it would make me happy. I'm obviously a bit of a Bitcoin maximalist myself. Not the most popular thing to say in a world of 20,000 altcoins, but it is what it is. And what's good for Bitcoin is generally good for the rest of the space. So they should take it that way. So if Bitcoin did decouple, I'd be super happy about it. I do think it's going to take time for that to happen and some pretty extreme events, mass adoption. We'll see if mass adoption gets pushed, one day. But I don't know that I'd say it's decoupled by any means. But no, it's a question that's going to come up. And I know that, that may even been a facetious question where you're just like, let's see if I can get a reaction out of this guy. But it is one of those things where I don't have the answer to that. If I did, I'd be happy to share it with everyone. I just don't. And then we've got, let's see what else we have in here. DXY and ES1. Yeah. Usman or Edwards. I really want to see Edwards take that because it's not at elevation. I like Edwards. I think he's more exciting. I think he's a better wrestler than people think because he did take the back of Usman in round one, but I think the elevation got him. It got everyone on that card when they rematched, and then he nailed the high kick at the end, which was beautiful. So I want to see Edwards take it because I think it's just time for a changing of the guard in that division. So but we'll see. Usman's no joke. If he beats Usman again, though, that's saying something because I think Usman is still the second best fighter in that division as of right now. trade alts to make more BTC. That is part of my strategy. There's very few alts that I will trade to not convert to Bitcoin. One of them we're going to talk about, we'll talk about it right now, is Matic. Let me get this.
Oh, you all thought you were going to say XRP.
No, that's you, brother. Max has found out that if you trade spot alts, that they have really good bounces. He discovered that. We talked about it in the DMs, and like I was like, yeah, I mean, just chart them out and then watch the bounces from the areas when Bitcoin's bouncing. And like when Bitcoin bounces like 1%, sometimes like he found XRP bouncing like 4%. He was like, this would be a mad
day. It's crazy.
Yeah, that's a mad day trade, isn't it? Because he doesn't use any leverage. He just usually trades like a whole Bitcoin at a time and takes whatever he gets out of it, right? You know, in terms of like spot. So that's the best way to trade if you can do it, if you don't want to, you know, use leverage. But a lot of us like our leverage. Let's go over
gamblers.
Just great. Yeah. Just absolute gamblers and swindlers. Yeah. So Matic was one we were talking about. I think it was DCF took the trade off 95 cents. Like I said, good trade. You've already come up to your quarterly point of control. So you are coming back into resistance. Also, you can see the 12-in-1 buried in this box as well. So to me, when I look at that, I'm just saying, okay, oh, and the value area high of March. So yeah, this is a great take profit up here at 122. And we talked about this bounce happening. I think a lot of people are looking for this to continue to a new high. I'm not necessarily looking for that unless you claim about $1.29, get back above this local rejection high here. Okay, can you see how that would change things a little bit? And in that case, I may even consider closing the remaining 20% of my short from up in this region. And, you know, that just closes right back out in the Matic. And then I see the increase on the way up. But yeah, where I'm looking to stack Matic is much lower. I'm willing to be patient on it. And a lot of reason for this is just, you know, I'm not saying we have to come back to these lows, but eventually I feel like we are going to fulfill this basically gap in price, unless this is going to be a V-shaped recovery to new all-time highs. But yeah, it's just a meme in my opinion. Who moves Bitcoin? Market makers, funds, algos, decoupling, world reserve currency, just narrative. Market go up, market go down. I'm jaded. Yeah. You know, it's, yeah, once you figure out like why the market moves the way it does through, you know, buyers and sellers, you learn a little bit of order flow. It really changes your perspective on caring if Bitcoin decouples. I mean, what got us into the space is the idea that Bitcoin's really cool. These altcoins can do cool things. That's why we're all here. But everybody turned into traders all of a sudden, and everybody wants their piece of the pie. We see opportunity. So if that's you, then this to me is the approach I don't think you have to take, but it's a really good approach to latch yourself to if you can control your emotions and control your, you know, your risk a little bit. That's really going to be the key. But yeah, you've come up into target. I mean, this is a good bounce if you took it. I mean, you made money for sure. You know, even on a spot bounce here, like let's say you caught the exact low at 95 cents. Because I think that was your target. I mean, it's a 30% bounce to the high. So, I mean, you've got to be able to make money in there somewhere, right? So you've already rotated your local monthly range. You've come up to the point of control of quarterly. Where is our future pivots coming in at? Yeah, new monthly pivots below you, quarterly pivots right here at the monthly point of control at 115. So this is going to be your key region, at least as of right now, subject to change over the next 2 weeks. Obviously, this will fluctuate depending on which way the price goes. Like if price goes lower, this will go, what in the world? Oh, I turned that off. This will head lower, you know. So if price held this region of the chart, which is where your averages are going to be coming in at, things would look okay. You could put pressure on this level and maybe try to bounce up. But the moment you start breaking back below here at about $1, 10 cents, $1.11, you're probably coming back down into these lows. Your value area low on this one is coming in pretty close to the gold pocket, it looks like. Yeah, right at the gold pocket. So your monthly value area low, this is a range that is going to be 15 days old as of today. So decent sized data set. Now I'd be looking for this like $1.06 down to like $1.04 region. I'd be looking to play that bounce if I was intraday scalping and I got a good reaction. I would trade that back up to potentially what was that, 111? I mean, that's 4 or 5% bounce, and then the point of control of it's at 115. So that would be the next play for me if I was looking for a day trade on it. I don't day trade these too much, but I am intraday short and then gig along. This is one of my biggest holdings from down in this region. You know, that and Polkadot. Polkadot's the other one that I'm Chad long in is what we'll call it. Pretty large portion of my capital is wagered in this box. So I've taken good profits on it. I'm yet to re-enter. You could have re-entered on this bounce. You did get a setup, a swing fail, but it hasn't really done anything since. So I'm not like, I'm not stressing too much. You've come up to the POC here. It looks like you may have front run the gold pocket on the bounce. I messed that up pretty hard, didn't I? Both ends got messed up. You guys can tell I've only been awake for like half hour. Yeah, you still have not come up to that gold pocket, which lines up where the old 12M1 from 21 there at 678. So 678 in this little box right here at the top of your value area high, which is now shifted up there. 678 to 693, still super key. Got to have this box if you're going to challenge any kind of highs. So to me, this is still resistance. Local gold pocket is there. I'm not really a buyer right here. This was a good place to get long. You had the quarterly pivot from this session here and the value area low. You got acceptance, swing fail. Then you're just targeting the point of control, maybe a range rotation. But it does need to get going, especially if Bitcoin's going to be dipping into its range potentially. Yeah, and you're outside of your monthly range. The bottom comes in down here. Yeah, I mean, if you start breaking below this monthly point of control, obviously 579 is going to provide a pit stop, but I would expect to see this low challenged over time and maybe even make a new low. So the best case scenario for Polkadot, in my opinion, is that it just chills out and doesn't do anything from here and maybe just does something like this and stays inside this range and it can break upwards. However, what are you doing when you see that? You're setting up a floor, guys. Make sure that it's not putting a floor and you're not buying up here. You can buy the floor until the floor no longer is support, right? The floor will be, the support is support till it's not. You hear us say it all the time. That's what that means, because the moment that floor gives, you're probably heading back to this box. However, you buy support because it's support. So if it comes back to support, I may consider a secondary entry on like a higher low or a clean swing fail, right? So we'll see what happens there. QNT is another interesting one. I did not get into all these moves happen on the weekend, so it kind of, I wouldn't say it priced me out of the market, but I definitely did not get in. QNT, right? So what did you do on QNT? We talked about the yearly open. It front ran it by a few pennies. This was actually my first target at 105.46. So we hit 105.77, so about 30-cent differentiation. Came up to the yearly pivot, back to the Q4 pivot, and into the range, and then rotation. That's all you've done is rotated, and you've come up to your 60-day average. So this is the 60-day average tap right here from the first 2 months of the year. So if you took January and February, you took the high low close, divided it by 3, excuse me, it gives you $131.38. That's how I generated this level on the 1st of March. And that was actually our exact high on the 4th of March before selling off to the target. Bounces back, takes the local high, and has now sold off back into the range. And you're just looking for it to rotate back down over time. So I've not been trading QNT, but if you were day trading this and you were just following your ranges, like your monthly ranges, you could look at March, right? March's range alone, even if you missed this whole move and got in at 117, you're still looking to take it to 124 and then take it up to about 130. And, it's $13 on a $117 asset. It's about 10%. It's not the end of the world. Your stop loss is below this low right here at 112. So you really do have a nice risk to reward from that structure. But basically rejecting from the February range, you have an NPOC from February up here. So what can we conclude from this? Let's say we don't see these lower valuations. You have a very clear setup here to where that if price reclaims the 2M2 23 at 131.38, that 60-day pivot, and gets back inside the February range, what would we conclude? $140 in the gold pocket. That's what we would conclude. You can see that this is the overall high up here at 163, down to our $105 low. There's our gold pocket. There's our point of control that's currently untapped. One would think if the 2M2 is claimed, we'd be looking to fill that in. That's just a $10 move. Well, $10 to $15 move. However, if you're trading this on the intraday and you're scalping it, you're not going to do it with leverage on Bybit anyway. You can. I think they use cross leverage though, which I'm not a fan of. So I only trade spot on this one. They don't have isolated. That would be the play. However, you've come up and found rejection. So the better play was actually to look to sell up here and take it back down to the bottom of the range potentially, right? That's what you'd be looking to do. So that's how I would have been looking at QNT. And I'm going to remain patient on this one because with altcoins, I've got more patience than I have on Bitcoin. I don't put a lot of exposure into altcoins that often, unless it's a full-on bull market, right? And then you can get some altcoin exposure that'll turn out pretty well. Looks like, do we have anything of note? Look at that. Look at that. That's pretty nice. So 118.90 is your trigger. If you lose 118.90 on like a weekly closing basis after a candle like this, I would expect this to be support actually. Let's go back down to the 4-hour. Where was that? Monthly and quarterly ranges. Let's pull those up one last time. Look at that. 118.90 in your quarterly value area low, lining up very nicely. Just doing some basic stuff here, guys. We're not reinventing the wheel. Backed up by the gold pocket. This is the region of the chart for an intraday bounce that I'm most interested in right here. Okay. You lose this little box, though, you'll probably make a new low. We'll probably see this box down here, and that's where I'm really interested. You've taken all of these lows. You may even take this one. You have the 6M222 here, and I believe this is also a monthly level of support, which I know that chart just got really messy. It is a monthly level of support, and I think the yearly opens there, so it's likely a quarterly level of support. No, it's not there. It's up here. Yeah, this will be the bottom of the range right here. You've got to see this box holding, and you can see why. There's really nothing else here on the high time frames. Boom, boom, boom. You lose this box where you go in $53 and $63. So that would be my interest is, can I get 118.90 down to 115 as an entry for an intraday scalp? If so, and the bounce is good, I'd be willing to take that. If not, then I would expect us to probably take the 2023 low in full if this box is lost, right? That's it. That's the TED Talk. And then what I would be doing with this bounce is up to you. If Bitcoin is rallying and looking good, we're holding support and we're trying to get to those higher valuations, maybe even a re-challenge of our overall high. If you come down into this region and you do something like this, I'm looking to run it. You know, this is also your quarterly point of control, not just February. This quarter is going to close in a few weeks. I would be looking to, you know, take profits incrementally. Of course, we're going to lock in some profit where we need to, somewhere in this region, maybe even right here. And then the last take profit, or at least a take profit, would be here. Remainder of it running to the upside if possible. If there's a breakout coming, if we remain range bound and Bitcoin does not make those higher valuations, and this is, in the words of Capo, the biggest bull trap I've ever seen, altcoins are going to feel it too. And you would need to be doing what out of this region? Profits, 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 and then stop loss at break even. So if it breaks down to lower valuations, we don't have to worry. I just have, and this is not something you can trade off of, but I do have a feeling that we are going to see this box again. Okay. So that's my feeling. That's why I'm looking at everything from an intraday to intra-week trade in terms of altcoins. Let me look at the chat. We are hauling ass in the chat. So I don't trade only OG coins. I would hardly consider QNT an OG coin. But yeah, I do trade like, you know, Matic, Dot, Link is a big one I like to accumulate. There's a couple others that I trade. Algorand, that's an OG one. I was making videos on Algorand in 2020. Atom. I don't trade Filecoin, but everybody likes that project. I don't think it's going to do anything. I think it's not that cool, but I could be wrong. That's still a 10% trade. You're 100% right. DCF, good job at 118. Yeah, you want to be around, 7:30 a.m. Yeah, it does hurt to see the trade go further, but you know what? We're in this to make money. So if you took money out of the market, you just wait for the next opportunity, wash, rinse, repeat. That's all you're doing. Otherwise, you're FOMOing. Is there ever a point where you're buying the EQ considered okay? There are some times where you could buy the EQ. You'll get bounces out of it. A lot of times you'll have other confluences with it, though. You know, I think Max can attest to that. Sometimes you get confluence where you least expect it. And if you have that and the reaction's good, then yeah, I mean, you could take the trade. You just have to have a stop loss either way. You have to understand that there is no guaranteed method of trading where you're going to win 100% of your trades. So you just remember that, oh, the EQ could present a good trade if there's other things there. However, I still can lose this trade, even if there's a ton of confluence there. Price doesn't have to do what I want it to. So you have your risk in place, you have your stop loss figured out, and you can enter the trade. You can lose a trade and it's okay. That's the idea. Is you want to be able to lose a trade and not care. It's not breaking your bank. It's not breaking you emotionally. It's part of the game. You know, once you get to that point, it's fine, you know. Yeah, so you can do 50, 25, 25, David. I do, depending on the nature of the trade. If it's like a day trade on Bitcoin, I usually take 50 at the first one or 33%. But if it's like a swing trade, I'll take like 20 and then I'll scale it to 10 and then I'll scale it to like 5, 5, 5. And now I'm at the point where I'm just taking like 2, 3% because it's so far into profit. I'm looking to see if maybe I can let it ride further. Link. Yeah, you always want to take money from the market. We've been going for 50 minutes. I'm going to go ahead and cut it off. There are 32 of you in here. I know that is disappointing. I am going to take one look at the DXY. I'm curious about it. Somebody posted in the group. I've not looked at this one in a little while. 104.775 was the key level we gave when we were looking for this box up here, which was hit. If we take a peek here, right? So this was our target, the 6M SFP and the prior 2023 high. And now you've come all the way back down to what? The blue box of death and destruction on the high time frames, right? So that's what this is. Okay, so high time frames right here, 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 and here. So you had to know that as Bitcoin was reaching its resistance, this one was coming into support on the daily, setting up very nicely here, took the overall lows on this candle and now engulfing. Very, very wild ass price action, for lack of a better term. So if this pushes, what you want to see is really a rejection. But if this gets through the 6M SFP, you guys know I'm looking for 106 and 107. We'll see what happens there. I'm not putting too much weight into it. It could remain range bound here, which we talked about this, that if it does something like this, you could be looking at a range right here. And we're looking to either take it down to this level or we're looking to take it up to these levels, right? You're just trading the range. If you're a Forex guy or gal. But the levels of the levels, I've not adjusted them. I haven't had to. And you can see that we're now trying to confirm this as support. You filled this gap, support, 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 back above. Maybe I'll get one of those accounts where I can trade the USD, trade the DXY, because absolutely cooked this chart. But yeah, you're looking at 104.775. You'd really want to see this holding. Let's take a peek at the 2M1 since we can do so. It's closed. Yeah, you've hit the top of your 2M1. Nice. It's February looking like. February's broke down. And what is the quarterly looking like? Yeah, you front run your quarterly low, but you could still make new highs. Like it's still showing you that the trend is up. You're still in your high time frame trends. So for me, yeah, I mean, pretty neutral on this one. It's range bound till it's not. You're looking at a range between 103, let's call it 103, and it looks like 105, right? So at some point, this does need to give. So maybe we get a partial rise, right? So that's what this is, would be potentially if it rolled over from here, came down. It's partial rise, meaning it didn't have enough to get back to the top of the range, which would be ideal for risk on markets. And then you're just looking to see, is this going to remain support? If it doesn't remain support, I do think that you'll get that breakdown into these levels, maybe even lower over time. And that would be the case. However, if it ever breaks this range to the upside, we got to get through 105.788 on the 6-month time frame, right? Go out to the 6-month chart one more time. Boom. You can see that this is where we have not closed a candle above in quite some time. So when we talk change of behavior on Bitcoin, we need to see those weekly and monthly closures. Same can be said for the DXY here, which I know nobody wants it to do that. There is your candle from the first 6 months of 2022. You put in your high and you are yet to close a candle back above this. All you've done is taken the prior high and now come back down. So you can see why this area on the chart is so important. You see these candle closures, right? What is it doing? It's remaining in a range up here, consolidating. So we need to see what that consolidation is going to do, if it's going to break upwards to these targets or break downwards back to the lows of this support here. I have a inkling of a feeling that if we break down below the 12M here at 102, I'm really targeting like 96. And then, lower over time, you're back inside this range. But as of right now, if you were to turn on, and we've got a lot going on this chart. Let's get rid of all these boxes and we'll end the stream with this. We can get rid of this guy. He's done for. He doesn't need to be there anymore. And where was I going? I think it's in the levels folder. Did I delete it? I certainly did not. There you go. This was your old consolidation range right here. Boom, boom, boom. You can see how well this gets things. What have you done here? We've back tested it. So that's more of a bullish sign than not. However, we do need to be open to the idea that maybe this is a lower high. And if this tops out here and we find our way back in below 102, I would start targeting the EQ and then the lower bounds of this. And that's all market structure based. This isn't, no volume is done on this. I'm not really doing much else. Just looking at the structure of this, you would want to see this continue if you were bullish on the asset, because you've now back tested your old range, which took place from 2014 all the way to 2022. It's an 8-year range. So finding your way back into it is not going to look great. And risk on assets would probably fly underneath those circumstances. So I'd be cautious with risk on assets as long as this is bouncing and recovering levels, especially 105.788. You recover 105.788, not only can you fill in the quarter one pivot and the 6-month pivot that are currently statistically untapped, but if you clear this level, you even run the chance of coming up to as high as 109 at that gold pocket. You know, that can very well happen, which would spell not disaster, but would not be good for Bitcoin and other cryptocurrencies more than likely. So bear that in mind. Good morning, brother Matthew. There's Mr. Turnbull. All right, guys, I'm going to hop off here. And unless Max, do you have anything that you want to add before we go? He's a man of few words. He's bored out of his mind. He needs to go walk his wiener. But get Badger his steps in. I know that he probably gets 40 or 1. So
literally, he hits his 10,000 a day.
Oh, yeah. All right, guys, you know the levels. We talked about it in the Bitcoin breakdown. Max did a great job setting you guys up for day trades potentially, what you would want to see if you were going to take like a long, things like that. We have our high time frame bias mapped out. We've covered the DXY for those that wanted it, and a few altcoins. So if you guys need anything, as always, comment on the video, like, subscribe. If you have any questions about what we do in terms of educational content, leadingcrypto.io. Usually Max has got our little QR code up there, but if not, it is in the description of the video. Cheers and have a great Tuesday.
Oh, hey, someone used it. We can see when someone scans it.
Hey, can you end the stream? Because I can't. It won't let me go up that high.
Wait.